Coming up in the next 30 minutes, more oil marketing firms reduce prices at the pumps as concerns grow about the margin of reduction. We are live with the Association of Oil Marketing Companies. Also in this bulletin, Presidential Advisor on the 24-hour economy policy, Govt, announces plans to reduce imports of agri produce to restructure the economy.
We cannot transform this country on the basis of imported Iyemadia. We have to find another way. And we're working with the private sector to look at these value chains.
Plus, economist Professor Govt reiterates calls for a renegotiation of the IMF program, warning of dire consequences ahead after the completion of the program in 2026. We've got details of this and more lined up for you. Please stay. Thanks so much. You could join me. I am Pius Kojo Baka. A look now at our stories. More oil marketing firms are reducing prices of petroleum products at the pumps. The latest is another major oil player, Star Oil. We have details in the following report.
Star Oil is selling a litre of petrol at 14 cedis, 37 pesos, while diesel is going for 15 cedis, 27 pesos. It is coming after market leader Govt reviewed its prices effective this morning, while another major player, Total Energies, also went down yesterday afternoon. However, their margin of reduction for the various products is just under 2%. Some industry watchers, on the other hand, have raised questions about the margin of reduction. This is because, based on an internal industry data, prices should have gone down by more than 4% per litre for the various products. These players have also raised questions about the time taken for the oil marketing companies to adjust their values. This is because the oil companies should have reviewed their prices on Sunday, March 16, 2025. However, most of them started reviewing their prices from Monday afternoon, March 17, 2025. Since February 16, 2025, this is the third time that we have witnessed reduction in price of petroleum products at the pumps. Some have argued that if this trend should continue, it could open the doors for some discussions for transport fares to be reduced in the coming weeks. Also, it will impact the cost of living and food prices as well.
Let's explore this further. Joining us via Zoom is the Chief Executive of the Association of Oil Marketing Companies, Riverson Opong. Thanks so much, sir, for agreeing to speak to us on Business Live. And first off, I want you to explain to me what you make of concerns that some of the OMCs are yet to review their prices at the pumps, despite the fact that the adjustment date was from March 16 or so. Why is that so?
Good evening, and I'm glad to comment on this. Yes, the reduction has been effected. Looking at the window starting from yesterday. The only issue I have, following the prelude that you played, has to do with the percentages that people expect. I think we need to go deeper into that, with understanding that the effect on the global market would have even been more than even the 4% that was even stated. And we are looking at 3-point-something%. But let's understand that it is a window. The oil marketing companies operate on a window base. That's a minimum to a maximum, a ceiling, right? So as far as the oil marketing company is not below the window and not above the threshold, MPA allows them to sell, whether price goes up or price go down. Let's not make so much fuss about the fact that price have gone down and they've been there's not an equal amount of rational I'll say changes. The question about the delays, let me explain a bit to you. When MPA brought the floor price policy, okay, what happens is that before any member changes the price to any other level, you need to inform the regulator 24 hours before you do that. Failure to do that warrants penalties, right? I'm a bit surprised that when fuel price go up and we predict, and it's true, and indeed it's supposed to start on a particular Monday, members don't quickly change it on that Monday. They go the same Tuesday and sometimes even Wednesday, because you need to write to MPA that you're changing your price from X to Y before you do that. And I'm very much surprised that people don't see that, but they see the fact that there's a day delay when it comes to that. But let me also explain something. Imagine you go and buy product at X last week, and this week there's a call for reduction. Answer to yourself. Are you going to be reluctant reducing the price because you're still going to pay at the old price, or you're going to wait and sell the old stock? And nobody cares about that from our members, when and how they make up with those differences when price goes down in a week, and whereby they need to pay back at the price that is higher than it is today. No oil marketing company will intentionally today sell at a price higher than what it needs to be sold. That it needs to be sold. Let me say this emphatically. And if you take a look at the pump price, the breakdown, more than 70% are ex-ref, which oil marketing companies do not control. Oil marketers do not control more than 70% of the build-up. Another 20%, which are the taxes and levies, we don't control. All right? It is just our margin, which is just 5%, no more. And it's for dealers and for OMCs to share. That we have control over. All right? So when there is this kind of discussion, let's not talk about oil marketing companies failing to do that or failing to do that. It is a holistic market that we play in.
All right, let's talk about the margin of reduction that has been carried out so far by the oil marketing companies. Really, is that satisfying?
Whether it's satisfying or not, what I would say is that I've also done my check, and I'm very happy you mentioned that you've seen Total. I personally drove to a few of the stations this morning when I was going to work, and I asked them if they've been able to change it. Some of them had their price not shown, and Goy was one of them, that they were changing the price. That's why it was now. And around 10 o'clock, it came to stream. And in fact, yes, they had changed the price. And like I said, if you look at the margin at which the plat prices and all those stuff have reduced, what you heard is true, that you should have even done more than 4%. But because there are other parameters that governs the constitution of the pricing regime, you cannot just equate a landing price margin drop to the pump price drop also. I mean, it doesn't work in that kind of correspondence. So I believe we are playing within the window, and there's a floor price set that nobody can go below the floor price, and there's also a ceiling price that nobody can go above.
All right, talk to me about the outlook. What does it look like for the prices of petroleum products? Already, prices have started picking up following warnings by Donald Trump that he will hold Iran responsible for attacks on the Red Sea. And this is likely to have an impact on the downstream sector, right?
Yes, you're right. I mean, it's very unfortunate that we live in a country or a continent where our pump prices are governed by geopolitics. And when I say geopolitics, the effects of other people's business. I mean the long short of it. We are enjoying fuel price going down, not because of any government intervention in Ghana, but just because of international benchmark prices going down. I mean, that's it. So if it goes up, pump price will go up, and nobody can play politics with it.
Very well. Thank you so much, Reverend Opong, for your time. He is the Chief Executive Officer of the Association of Oil Marketing Companies, speaking to us on the development in relation to the petroleum downstream sector. Away from that, the Presidential Advisor on the 24-hour economic policy, Govt Tano, has underscored the urgent need to restructure Ghana's economy, moving away from its heavy reliance on imported commodity export. He highlighted Ghana's staggering $2.4 billion annual food import, saying it undermines the national growth and, of course, job creation. Speaking at the PwC Ghana 2025 Budget Digest in Accra, Mr. Tano said government accelerated export development program will address the challenges affecting the agricultural sector. Here's a report.
Speaking at the 2025 post-budget analysis, Mr. Tano outlined the transformative economic strategy aimed at reducing import dependence, strengthening local production, and creating sustainable jobs.
it doesn't stop just at the primary production of agricultural goods, but basically the value-added processing. When Nora talks about the fact that a lot of manufacturing companies have capacity but are unable to utilize that capacity, a lot of it has to do not only with the unavailability of finance, but the unavailability of raw materials.
Presidential advisor on the economy, Seth Etekpe, said the government will continue to support the Exim Bank to push for value addition.
You will notice that the name for the Ministry of Trade is now Ministry of Trade, Industry and Agribusiness. And therefore, I think Guzi mentioned the value addition elements. There was an allusion to Exim Bank. Value addition means we must look outward. Value addition, the chocolates and things which are being done, provide the financing.
EWC senior country partner Vesh Ashabo expressed confidence in the government's multi-pronged approach to offset revenue losses.
So from a PwC perspective, we believe that the budget is a good start. It's a nice statement of intent. We think that if the government is able to implement the various measures that are set out in the budget, it will indeed begin to move us towards a better environment that will allow businesses to thrive and private sector to grow. We've been saying that private sector is the engine of growth for years, but obviously that has eluded us because of all the challenges we've had. So from a business point of view, we think that it's business friendly. The key will be on how we implement going forward.
The Institute of Statistical, Social and Economic Research, ISE, has projected that government's interest payments, compensation and statutory funds obligations will absorb 83.9% of total revenue in the 2025 fiscal year. Speaking at the post-2025 budget statement review in Accra, ISE's Executive Director, Professor Peter Quartey, noted that the country's fiscal outlook has improved due to the debt exchange program.
The Institute of Statistical, Social and Economic Research hosted its post-2025 budget statement review, providing an independent analysis of the government's fiscal performance and economic outlook. Speaking at the event, ISA's Executive Director, Professor Peter Quartey, emphasized the projected revenue challenges for 2025.
Interest payments will see a year-on-year increase of 37% from the budget. It's going to be about 4.6% of GDP. Now, if you sum up your interest payments as a proportion of total revenue, compensation as a proportion of total revenue, and statutory funds as a proportion of total revenue, you're hitting 87.9. So in other words, these three would absorb 83.9% of our total revenue. We are left with very little for capital expenditure or very little fiscal space.
He also highlighted the country's improved fiscal outlook, attributing it to the debt exchange program.
Our debt GDP ratio has declined to 61.8% thanks to the debt exchange program and the restructuring that went on. But it was also spread across domestic and then external sources of funding, of support. So for the third successive year since 2019, we've had a higher external debt program. So that's the debt GDP ratio, a clear signal to us that we are gradually hitting the sustainable threshold. The IMF said within the medium term, our debt GDP ratio should be around 55%. We are 61.8. If we continue on this trajectory, hopefully we can hit the 55%.
Professor Quartey further explained the rationale behind the use of the tax refund account.
You are only refunding 49%, 43 or 49%. The rest, you are not refunding. Could it be that there is so much bureaucracy, but companies are not accessing the fund? Could it be? Generally, for businesses, the thinking is that when your money goes to government, you never get it back. We all know. So what do? Do you say, because businesses don't come for the money, I will take part and use? Or rather, you make it more accessible to businesses?
Meanwhile, the government has proposed an amendment to the Revenue Administration Act to reduce allocation to the tax refund account from 6% to 4% of total tax revenue.
And we want to stay one longer with Professor Peter Quartey because he has opposed government's decision to, scrap the betting tax.
2021, we are told the road toll brings us 72 million, brought us 72 million cedis. Betting tax is around 140 million. Now we want to introduce road toll, which is lower, and give out betting tax, which gives more. I don't know. You see, some of the diseases are very populist. I know the young ones who bet will not be happy with me. But I, for one, I am against this thing. You bet, you get earnings. I pay tax when I do consultants. I pay 20% of my consultants. Honorarium, I pay 20%. Betting, you've earned income and you are paying something. And you say it should be free. And because of votes and populism, we allow this. In other jurisdictions, betting is like a hobby. After work, then you go and bet and play casino, drink, beer, giddies with your friends, and come home and sleep. People want to turn betting into a way of work, like employment. No, tax and use the money to develop something for the youth, the young ones. This is not a sustainable thing. So when I see the youth arguing, when you talk about betting tax, then they start insulting you. I don't understand. This is not your future. If somebody is moving you into this, that's not your future. You need sustainable jobs. So I don't support this scrapping of betting tax on earnings. You have to be taxed, but let's use the money. Develop sports. Develop something that the young people can meaningfully engage in.
This is still Business Life. We have more for you after this break. Hello, welcome back to Business Life. Economist Professor Govt has reiterated calls for a renegotiation of the IMF program. He argues the program design, benchmarks and growth targets are unsustainable and insufficient to reduce poverty, hence the need for the current government to take a relook at the parameters. He cautioned there could be severe challenges after the completion of the program in 2026.
Had maintained their position much earlier that the program needs to be renegotiated. We need to take another look at the program, because if you look at the program design, the structure, the benchmark, the indicative targets and the growth trajectory, that growth will be insufficient to lift millions of Ghanaians out of poverty. And if you look at the new mandate, the parties, the government manifesto and all of that, it's going to be challenging situating that within the IMF supported program without disruptions. Then again, the most important thing is to say that because over the years we have not been able to maintain macroeconomic stability for long, so the program will deliver some relative macroeconomic stability. But what happens after 2026? Especially after 2026 is when you see the bullet repayment from our debt restructuring. Will the country be able to have the framework to be able to absorb those repayments and be able to also allocate sufficient funds to infrastructure financing and growth enhancing? You can't see that clearly beyond 2026, and that is why we should take advantage of the regime change, the new mandate, a new wine in a new wine skin, and see how we can readjust the parameters and make considerable progress, particularly beyond 2026, if you are an investor.
All right, let me take Now, Finance Minister Dr. Kasiala Tuforsin has told Parliament government has taken measures to ensure the Ghana cedi remains strong and resilient against major trading currencies. He's been speaking in Parliament.
Last year, the same period, the Ghana cedi has depreciated by 5.7, as against the same period, 5.3 this year. This shows a reduction in the depreciation by 0.4%. Mr. Speaker, The cedi depreciation is driven by tight FX liquidity, increased demand from energy sector payments, and commerce. Mr. Speaker, the cedi has, however, witnessed stability since the 19th February on the back of central bank's forex intervention aimed at improving FX liquidity and market confidence. To maintain this exchange rate stability that we've seen relatively from February 19th, the Ministry of Finance, working with the central bank, have outlined a number of policies, and this include the establishment of the Ghana Gold Board to enhance the generation of foreign currency to help the central bank accumulate enough forex and to intervene as and when they are supposed to intervene. The Bank of Ghana will also continue the implementation of its FX forward action to support the stability of the Ghana cedi. The government is also front-loading its fiscal consolidation through expenditure reduction, and we believe that will also help in the support of the Ghana cedi. Mr. Speaker, aside, we are also planning, as part of the 24-hour economy, to introduce a number of measures.
The Finance Minister also has been providing an update on measures to fund programs which were either funded by USAID until the U.S. government cut funding.
Given the reality of the funding gap of $156 million, the government would take the following measures to close the funding gap. Mr. Speaker, as part of the resources that will be made available as a result of the uncapping of the National Health Insurance levy, part of it will be used to close the gap created following the suspension of the USAID funding. Additionally, an amount of 100 million Ghana cedis is being allocated in the goods and services budget of the Ministry of Health under the expenditure line Global Fund. This will be used to procure vaccines that hitherto were being funded by the USAID.
Thanks so much for watching Business Live for today. I am Pius Kojobaka. We have more for you when you log on to myjoyonline.com/business. Grateful serving you. Do enjoy the rest of our programs.